Welcome, everybody. This is our last Zoom meeting of year 2022. The next 2 weeks we're coming into the Christmas and New Year's holidays, so I'll be busy with family, and I'm sure you will be busy with family. I may be able to do a Zoom at 2 p.m., but I doubt anybody will show up. So we're just going to cancel it for this year. And I'm really excited for our meeting today. I want to keep it straight to the point. If you have questions, type it on chat and I'll address it. But a couple of things. Number one, I want to walk through once again how I do support and resistance, how I would look at a chart and walk it from the weekly and the daily, okay? The day trading stuff, the videos are already in Discord. It's right there, just click it and you can watch how we day trade. And as you can see, day trading has been on fire. The record has been awesome. I met a guy through Facebook who charges $149 a month in his Discord, okay? And the guy's record is like 13-6. Oh, but we still made money. He's like, yeah, but you're charging $140. So I'm like, we're a fantastic deal. I will never be charging $149 a month for our group because I'm not here to make money off of you. I make money enough from my own assets that I'm managing for my clients as well as my own. I don't need to make money from you. Okay, so be happy that that's the situation. And so we got something exciting. Anyway, so I'll walk you through the process of how I do that, and then I want to be able to walk you through some of the common mistakes that people make. So as we do this, right, we'll look into the end of the year, how SPY may go, potentials of it, and then look into 2023. And then we'll go through some of the common mistakes to keep in mind, and some of the goals that we ought to have, some of the plans for trading that we ought to have. These are all reviews. I've gone through them before. We're going to walk over the 520 risk management because that's an important reminder. We lost a subscriber because the guy went YOLO and he blew up his account. It's like, I don't have any money to trade. Sorry, I got to quit. I'm like, dude, you know, if you're going to lose $10,000, the guy lost $10,000. If you're going to lose $10,000, why don't you just pay me to teach you for a week, the $3K that I charge, and that way you'll have $7,000 to be able to grow it to, 100%, 200%. And the guy just blew it. $10,000 because he went YOLO. So we're going to go over the 520 risk management and some of the other highlights as well. Okay, so without further ado, everybody can see the chart that I'm sharing, the mini ES, the SPY futures. Okay, and I like using the SPY futures because I started trading futures. One great thing about trading futures is, in relation to options, is there's no theta burn. You don't have theta burn on these things. And I'm like, cool, that's even better. So now you're just addressing it from a technical perspective, and then I have a plan for 2023. I'll share that with you. But just to kind of walk over with you, first of all, this is the 3-panel futures picture, okay? But I want to start with the weekly, and I will take a look at this and say, okay, so the buy and sell signals, right? I'm getting a sell signal for this week, okay? And it's kind of like this dragonfly formation, okay? And I don't want to just take it for what it is. I want to be able to really analyze it. And so what I would then do is, from that weekly, let's look at it from different perspectives, okay? Some people have been liking the Strat Assistant, so we'll take a look at from a Strat Assistant perspective. And so when you look at it from the Strat Assist, what can we tell from this? This is a 3. So 3 basically means that the high and the low was greater than the previous week. Okay, that's basically what it means. And in general, looking at it overall, it's what you call a reversal bullishness, a reversal strat bullishness. Okay, so even though the weekly is down, okay, it is bearish. The monthly is actually looking somewhat bullish. Quarterly is bearish. Okay, that's good to know. So from here, I am looking at the potentials of 4183 and 3879 as kind of like, think of it as like this, these are the wide bowling lanes in which I'm dealing with. And so if we break out above 4183, then we have Santa Rally coming. Okay, so 4183 basically is like 418 on SPY. Okay, and so hey Derek, come on in. So this is what we're looking at. Just looking at from a strat perspective, we're looking at 4183 as a potential trigger if you are working off of a strat weekly, and then 3879 as a down trigger. Okay, so that's what we have. Now,
35-year-old female comes complaining about
hey, Derek, you're on. I'll mute you. All right, so we'll look at it from that perspective. Now, I love Fibonacci. And one of the great things about the Fibonacci retracement that's given in TradingView is that it is updated on the daily chart, it's updated daily, and on the weekly chart is updated weekly. Okay. So sure enough, when we look at it from this perspective, right here at the 4,000 mark is the 618 pivot. Okay. So what does that tell me? 618 is a very important Fibonacci number because 1 by 1.618 is what you call the fee ratio. And you can watch previous Zooms where I explained that in depth. But that's a very pivotal position, okay? And so from here, we're looking at potentially, looking at it here, let me draw it right there. Around the 4309 being one huge support, okay? And then this one right here, at 3781 is another potential area of support and resistance. So Fibonacci, basically, I'm just looking for support and resistance. So when I get rid of all of that, this is what I have, okay? So this kind of creates my, from a weekly perspective, a large picture view of where the trading may go, okay? So I look at this and say, well, if we go over 418, some people say 420 on SPY, then we're really looking for a bullish break. And that'll go up to 432. Here's your resistance. If it breaks through here, then we can see it go up to maybe 4,400, possibly. And same thing on the flip side. Since we are on that 618 pivot, okay, and if things start moving downward and it breaks through this level, okay, we may see it bounce off of the 3793. And if it doesn't bounce, oh boy, we are looking for a very, very bearish 2013. Okay, so that's the way. If you have any other questions, type in regarding the weekly and the Strat Assistant. Okay, so that's what we have from the weekly perspective. Now, let me turn to the daily. We've gone over this in the previous Zoom. Okay, we were in a pivotal situation where we had a downward trend line that had been drawn this way. And last week, we actually had seen it break a second time. Okay, it broke it here and then it broke it here. Okay, 2 weeks in a row. And so we are what? Hello, what's going on? Can you see my screen? Because my screen just blanked out.
Whoops. No, it just disappeared.
Okay. There we go. What just happened? Okay. Yeah, please don't share your screen, otherwise we're going to run into problems. Can you still see my chart?
No.
You cannot see my chart.
I think that was me trying to display to my TV. That might have been my bad, so I'm sorry. I'm sorry. I'm like, it doesn't want to display. Trying to watch it on my phone. My bad. Sorry, CJ.
All right, no problem, no problem. Thanks for fessing up. I'm like, what happened? Did I do something wrong? Did I press something wrong?
I don't know if it's me, but I was doing it, so I'm assuming it probably
Okay.
was.
All righty. So can you now see my chart? Anybody?
Yep.
I
Yep,
can,
Robert?
yeah.
Okay, you can see it. Okay.
Yep. Sorry.
Okay, good. All right, so last week we were talking about this and saying, okay, it broke through. Okay, so will it continue on or will it break down? Because it had broken down once, twice, three, 4 times, and this is basically the 5th time that it would try to break up, go above it, but because of the FOMC. Okay, so if the FOMC wasn't there and quad witching hour wasn't there, maybe we could have broken up upwards and melted up in this bear situation, because we're still in the bear territory. But this is what happened. Okay, it actually broke down. They took Jay Powell's words and they're like, oh heck, he's not participating, he's not helping us out. And so you have above average volume of sellers. The majority of them were sellers, especially in the last 2 days. And we basically broke down. Okay. So from a trend line perspective, we broke down. So this is bearish. Let's look at from an RSI. Now, you don't need RSI, but for today's meeting, I decided to put it on, and you'll see that this little squiggly line is below the yellow line. So there's still weakness. There's still downward movement, and if it's anything like late September, what we may see is just basically break down all the way to the bottom. One ray of hope, this idea of potentially self-fulfilling Christmas rally. So if it does, my rule of thumb is whenever there's a relief rally or a melt up, at the end of the day, I'm buying puts. I'm buying more puts. Put. And just scaling it in. And the way I would be hedging my positions, which is still overbearingly bearish. Okay, I have a lot of puts on my clients' accounts, on my accounts. I have ES futures, just put. Okay, sell. That's the March contract that I have at the present time. Okay, it's pointing down. Okay, so that's looking at from a trend line RSI perspective. Let me also look at it from a 200 MA. And this thin blue line, I don't know if you can see it, but we'll zoom in. You'll notice that it has hit the 200 MA and it has broken down from there as well. All right, so let's see the 50 MA and see where it's going. And what I see here is, would you look at that? It pierced through, the wick pierced through the 50 MA on the daily, and then it bounced off of that. Okay, so what does that mean? Are we reversing? Is it a bear flag? Or are we going to be chopping through the 618 Fibonacci the rest of the year? Good question. I do not know. So speaking of Fibonacci, let's take a look at the Fibonacci levels. And this is what we're seeing. Okay. At this juncture, let me get rid of the RSI. Okay. This is what we're seeing. Okay. And okay. So it's bouncing off the 382 level, which is 38.77. Okay, it closed up at 38.79, so it's not that big of a bounce. 38.77 is the 382 Fibonacci level. Okay, so 41.10 is the next up. 37.34 is the next one down. Okay, so I'm looking at that and saying, okay, let's put a mark there. Let's put a mark there. And from a daily perspective now, these are my parameters. Okay, all the way down here. I know I erased. Actually, I would put it. I won't go deep into explanations. Okay, you can ask me later. But this is actually another Fibonacci line which I don't have it on, but 38.30 is probably the zone in which it needs to bounce and stay up. And on at least on a daily basis, if it breaks that, so Monday, if it breaks 38.30, then I'm going to be leaning pretty bearish. If it starts breaking above 41.10 on a daily basis on Monday, at least for that day, it's going to be bullish. Okay. Now, am I going to take, so at that time, I know the bot will throw out a whole bunch of buy signals. Okay. I've learned my lesson with one of them. It cost me dearly. I lost, what was it? Was it Zoom? Yeah, Zoom. Funny thing is I had like 30 contracts put on Zoom and there was a call signal. And I was like, okay, I'm going to day trade it. So I got like four contracts, 5 contracts, and the darn thing just tanked on me. And I had to cut it at a major loss. And I was like, dang it. I would have been perfect this week had I not done that. So against my better judgment, I did what I did. So this time, every loss is a lesson, right? That cost me about $3,000 in a lesson. And so for this coming week, if it's going to be bullish, I'm going to stay out of the market all week until it reaches a particular peak and I see it on the indicator pro. When that thing shows sell signal, like right here, okay, if it shows a sell and all the confirmations are there, I'm going to jump in on that place yet again. So I'm jumping in. When it shows weakness, I'm jumping in on puts, okay? But it could bounce up to here and have that Santa rally next week. Will it happen? I do not know. So that, in essence, is how I would do my levels, all right? Now, there's a lazy man's way of doing it, okay? I picked it up. I like it because I use their option flow. I moved out of Black Box into Inside Finance. And guess what? Inside Finance has their own algo. And, the one thing that it has is all the Fibonacci lines and everything, the support resistance, they do it this way. They give you the stop loss and they give you TP1, TP2, TP3. And I'm like, I like anything that's automatic and it comes with it for free. I'm like, great, wonderful. Use my discount, AlertBot 20, and you can actually get it for as low as $44. I used to pay $99 for Black Box. Now I'm getting it at basically half price. And you get this, all right? So based on Insider Finance algo, okay, we're looking at a bearish week, we're looking at TP1 would be 37.30. I don't know about this one. Okay, maybe this is in a few weeks. Maybe this is next year. But at the very least, is pointing to a 37.30 take profit if you were to swing this, not day trade or snipe on a funded account. But if you are just swinging it, this would be the way to consider it. 37.30 is their level. Okay, any questions so far? All righty. All right, so we'll deal, I'll answer that and address it. So there's, everybody tweets about it, okay, but this is by far the most salient guy that I've seen on Twitter. Okay, this is his call. Okay, so these are his graphs. This is his call. Okay, so if it bounces 31.10, 39.60, otherwise 38.10, 37.30, 37.30. There you go. Okay, so that is 37.30 is the first magnet. Oh, so insider finance is pretty good with that. Okay, 37.30 right there. That's actually, again, like I said, Fibonacci line, which I left it invisible. So this is what you have. Okay, Adam Mancini, 4. I decided to follow him and actually ding the bell. So whenever he puts it out, I take a look at it. And it's a great confirmation when I see that. It's like, oh, okay, good. Somebody's thinking like me, or at least I'm thinking like them. Okay. Now, a bunch of you are getting interested in futures because I like futures. I really do. And ever since Mike talked about it and Kyle had talked about it in a couple of months ago. The one positive thing about trading futures, SPY futures as opposed to SPY options, is that you don't get theta burn. And the thing with SPY options is the theta burn is amazing. And when you get it and you're wrong, boy, you pay through the nose, because a lot of what's burnt out of SPY options is the external value of it, okay, the extrinsic value of it. So that's one of the reasons that I'm really liking futures. And a couple of people have already gotten the Futures Pro package, which is listed on Indicator Pro.shop. And this is my latest upgrade. So I have, and because everybody doing props are sniping, I set it up in such a way that they can snipe. So this is the 10-minute E-mini futures. This is the 2-minute E-mini futures. And then you got the VIX and the dollar. And one of the things that I notice about the dollar is that, not always, but I would say 95% of the time, it is an inverse relationship. Well, UVXY is almost 100%. It's an inverse relationship to SPY, QQQ, or generally overall stocks. And the same way with futures, okay? So typically we used to look at UVXY and react to that, okay? So if UVXY starts showing a huge trend with high volume moving up, then we knew that we needed to lock in our profits on our day trades and get out, okay? Typically that happens between 11 to 11:30. And definitely by 11:30, because that's when the European market closes down and they start closing their positions before their market closes it. So that's why you almost always see it around that time. Not always, but almost always, okay? One thing that I found out trading futures is that DXY, the dollar index, moves first before the others do. Almost always, okay? Almost always, not always, but almost always. So this is the new setup for the Futures Pro. If you're interested, go to indicatorpro.shop and you can get the package, all right? This is in development. Somebody actually is doing Forex. I sold it to him offline, just directly. But this is something that I will, Forex is such a, but if you are out of the country and you wanted to trade like the Asian market, futures suck. Okay, SPY futures suck during the 6 p.m. to 9 p.m. But Forex, ooh, you can make some money off of Japanese yen, Australian dollar, the loonie, the New Zealand dollar. So things move in Forex. So if you are in an Asian market, this is great. If you're in a time zone where you live in Europe, I know some people in our group live in Europe. Forex is definitely one of the ways to go because the Euro USD is actually very liquid. It's actually much bigger than our stock market, and there's a lot of great movement. So in this one of the unique things that I do is that I use the Renko charts in order to get into the 1 hour, 10 minute, and then 2 minutes. Okay, so that's that. Let's go back to questions. So Robert, you had a question. Looks bearish, but to add to the bearishness, I'm expecting people to sell off their losses in the last 2 weeks. Yeah, so that's tax loss harvesting. Okay, on the flip side, people have lost so much money already. The question is, do you really need to do that? You're personally hoping for a Santa rally. Yeah, there's a potential for it. And the key, and Pin Duo Duo is one of them. I have puts, you got calls, and so far you're winning.
But my time frame is probably longer. There, it goes out to January 20th, so I've got time.
Me too, January 13th. So let's see.
So we're
Bulls
pretty
and the
close.
Bears. Shanghai actually recently announced this morning that due to COVID increases, Shanghai is shutting down their schools.
Wow.
So I may win. We'll see. Anyway, China, boy, you're really gambling if you ever touch China. And so when you go in there, just go in there with the mindset of I lost everything, you know. And that's another one lesson that I won't be covering, but I'll say it right now. If you go into China or any other nation other than the US market, or if in the US market you go to any of those Wall Street bets meme stocks, go in with the mindset of if I put in $5,000 into this option, that money is gone. Okay, and I'm hoping to, you know, make money off of that, but just this is gone. All right, so that's the way to have that mindset. Now, is there a possibility for Santa rally? Yeah. The economic reports for next week may be positive. Institutions need to do some window dressing for their quarterlies. And if they need to do that, guess what? Do you think they're going to manipulate the market?
Yeah.
Do you think the market makers are going to, you know, fist pump with the institutions and say, hey, let's do this? Yeah, they could. Okay. And that's when you're going to have the melt up, the fake rally that's going to happen. And I hope it does, okay, because that allows me to close some of my calls that I have as a hedge. But I tell you what, it is just not looking good moving forward. All right. What percentage stop loss for every trade? Good question. The answer is it's up to you. Some people who are sniping, they keep it at 10%. Okay, so a sniper will go in with a 10% stop loss and wanting to go in with the mindset of they're watching. Okay, so I go by the 10 minutes when it comes to options. I go by the 2 minute when it comes to futures. Okay, but some people will trade options based upon the 2 minute or 1 minute. Okay, and they want to get in as they read the candles, they want to get in on a, so if it's a call, they want to get in on an upward movement, and there's an increase of volume. Okay, so their stop loss will be short and sweet, and they're hoping to get, 10-20% quickly right away, and then, get out. Okay, that's the nature of sniping. You do it within 30 seconds to as long as 5 minutes. But typically, unless you do it within 5 minutes, you may have gotten in on the wrong spot. For options, right? So when I call out options, if I don't call out something on the bot and you decided to go in, it's like, hey, I like this, I like the chart. Hey, it says sell, I'm going to get puts. Rule of thumb is get at least 30 days DTE. In other words, the date of days to expiration. Okay, don't do weeklies. If you're wrong on the weekly, you basically lost all your money. Forget about that 30%. Number one, you're going to hit 30%, 50% loss right away. Okay, and the chances of you recovering is very, very little unless you have an FOMC event taking place. Okay. So that's one. And the beauty of 30 days of days to expiration is that you don't have the theta burn that you have on a weekly or even two weeks ahead. Okay. Check out the video on the Greeks under the education tab, and you'll get to understand why. So unless you understand the Greeks and you're wondering, hey, how come it's like so close to the money? How about, pricing, the strike price? Some people love to put it up like, way out of the money, and it's a weekly. Okay. That's a lottery ticket. Okay. You'll do well if you hit 50%, but that's a lottery ticket. And sometimes I do that with SPY when I see a huge movement. I mean, the last time I did a SPY, I hit 30% in like 15 minutes. Okay. And I just threw it out on Delta Chat just for the fun of it. And I was able to hit it. Okay. Other times I lost everything. Okay. But it was 11 cents. Biggie, no biggie. Okay. And always when I YOLO is with money that I have already earned, not from my principal. It's out of the profits. You're just throwing a little bit and saying, here, all right, let's buy a lottery ticket and let's see if it hits. And let's see if the technicals really work. And the the market makers are actually doing what they're supposed to be doing, right? We saw that yesterday when right after the market closed, futures just went. And I'm like, dang it, I should have held on until after market, but I was too tired. Anyway, okay. Any questions in regards to that? Do you like that? 3830, 4110 that's your bowling lane, okay? Anything outside of that, it's a gutter ball and you're going one direction or the next, but always be leaning bearish, okay? Also keep in mind that this is your 200 moving average. So if it hits it, it's likely to come down, okay? And the reason it's likelier to come down is because of look at what FOMC is doing. It's very hawkish. Look at the overall market. The retail sales wasn't helpful at all. All right, good. Do you maintain Excel for wins and losses or journal? No, I do not. My things are timestamped on the indicator bot, so you can trace back all my entries and exits. So when I call out an exit, okay, that's the win right there. Okay, as to how many you keep, how many you let it run, whether you close it all, it's on you. Okay, so if you get in on a option call out, it's up to you to close it. Okay, don't wait for me. It's up to you to close it. Okay, but the rule of thumb that I always want you to keep, and I constantly repeat it on the indicator bot when I type it in, is all right, it hit 20%. Okay, I closed in profit, a third, 2/3, 3/4 of it, or most of it. move your stop loss to 0 risk or 5% profit, 10% profit if there's enough premium bandwidth, okay? You have to determine that. So if you bought it at $2 and, you know, the profit target was at 220, you don't have much room, okay? So you move up the stop loss at 0 risk. But something like a Tesla, where it goes from like $7 to $9.95, okay? Those, my greed wants to keep it, okay? But I've learned from my greed plenty of times of how those things can turn into minus 5,000, minus $30,000. I have lost $30,000 one time in Tesla because I was too freaking greedy, okay? Instead of closing it out at a $20,000 profit, okay? So don't be greedy. If you have a target, and we'll go over that stuff, if you have a target and you hit it, mechanically just boom, get out, move the stop loss to 0 risk. With Tesla, I like to give it about a 10% profit if it hits the stop loss, so that every one of my contracts on Tesla will be winners, okay? And if you haven't gone through the 17-part options crash course on our Discord, can I ask you, do not trade Tesla. Do not trade Tesla. You can paper trade it all you want, but do not trade Tesla, because it will burn you. It will just ravage you. It'll knock you out. Believe you me, okay? I've done it many, many times, and I've paid the price, and I've learned from my mistakes. Please also learn from those mistakes, okay? Yeah, I do so many trades, Shri. I'm a portfolio manager of several accounts. For me to track all of that stuff, you know, I don't have a secretary. Sorry. Anybody who wants to volunteer as a secretary, that would be great. All right. So without further ado, let's see. I had invited, is there a Brian here? He's not here yet. Okay, let me, send this guy. Here's a trader that I wanted him to come in because he was really on point. And when I was doubting myself, he really helped me be sure of, be confident of myself. And that allowed me to make a lot more money. So I'm very thankful for him. Let's see if he comes in. He really knows SPY and NASDAQ, okay? So what I know is what I know, but he has I believe a more keener insight, probably as good as Adam Mancini. So we may yet have an Adam Mancini in-house come 2023. All right, so let me go over these things. I'm going to go over fast. This is being recorded, so that way it is being recorded, right? Yes. So that way you can review it again, but I will go over through it fast. All right. So these are the common mistakes that we all make. Okay. Please take notes if you can. Number one is FOMO. We have the fear of missing out. We will see something just take off and take off and take off, and you're like, oh, no, I'm going to miss the train. It's like the train is moving and you're thinking, I got to catch the train. Well, the market doesn't work like that, okay? The train has its destination and it'll get there 100% for sure, but the market can easily turn around. So if you miss it, so to speak, and it has gone beyond a certain level, be patient and wait for it. Wait for it to bull flag. If it's down, wait for it to bear flag. That's when it kind of recovers a good 20-30% from its bottom before it tanks again. almost always when there's a high volume and a consistent volume from institutions selling into a stock, that'll happen. So for example, we have, here's Tesla for you, right? So, oh, Brian is here, great. Here's Tesla for you. I'll call on you very, very soon, Brian. So if you had missed this part, notice that over here, there's a bull flag. There's 2 days of bull flags, okay? And the next sell signal you could have gotten in. And you could have swung this all the way down, buy signal, get out, sell signal, get in, up, get out again, sell, get in, get out, get in, get out. Okay, get in and stay in. And look at this. Even the last one would have been from 191 to 155. Okay, so this would have been a beautiful swing downward. Okay, so when you get FOMO, please wait for it to come back. It will bounce back. All right. Number 2, greed. There's a saying that I've been sharing with you multiple times. Pigs get fat, hogs get slaughtered. Hogs get slaughtered. Okay. That is why when you see it on the Indicator Pro and you see that first buy signal, okay, here's the thing. This is what you see. This is what you see. Right there. You don't know if it's going to reverse back. You don't know if it's going to come back down, okay? But if you have major profit and if you hit your target, okay, take profit, move up your stop loss to 0 loss, 0 risk, or 5 to 10% profit, and just let it run, okay? Let the market do its thing, okay? So don't get too greedy, okay? So pigs get fat, hogs get slaughtered. Revenge trading. This is when your emotion gets in the way. This is when you've had 2 losses in a row and you're like, oh, you know, this time I'm going to be right. And what revenge trading makes you do is you forget about your technicals, you forget about your trading plan, and you go in too risky. Okay, you break the 520 risk management rule. We'll go over that. Okay, and this is where you can burn your portfolio and you can blow it up. All right, and take my word for it. If you've known me up to this point so far, you know that I'm a very emotional, passionate guy, and that sometimes had translated into my trading. And if you want to talk about blowing accounts, I have blown over 6 different accounts, my own, okay, not my clients, my own, at a cost of over $360,000. So take my word for it. Revenge trading, it may work if you get lucky. It will not work eventually. Okay. Number 4, another mistake is trying to hit a home run. Okay. This is where you see a winning trade and it keeps on going down and you're like, oh, look at that. And I've done that with futures trading on prop accounts. And I was like, oh, look at that. I hear the ticker going tick, 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 you know. And then I would go, instead of micro futures, I would go ES. And I would get like 4 contracts. Next thing I know, it turns around and it kicks me out and I get liquidated. You know, that emotion, it's just emotional. Just stick to the plan. Even when you're doing well, pat yourself on the back, but stick to the plan. All right. Keep this in mind. Write this down. If you forget everything, write this down. I will find success when I trade with the trend. Always trade with the trend. Don't fight the trend. You can fight the Fed, but don't fight the trend of the market. Okay? Ride with it. All right? For those of you who are premium, you pay attention to the bot. Since we upgraded to Indicator Bot 2.0, my option callouts has been 103 wins and 8 losses. Okay? Name a person name another Furu out there who has that type of record. You think the people at Atlas Trading, who just recently got indicted by the SEC, do you think they have this type of record? Yes, they do. The only reason they have a better record than I do is because they were pumping and dumping. So they had those records. Their followers did not. Okay. So if you have been following me on my call outs and you have been following your risk management, you actually should have a better record than I do. Okay. But that's where we're at. Okay. So let me see. So again, even when the bot gives you the alerts, trade with the trend. Okay. So the trend is bearish, but there's a call alert. Okay. Can you take it? Yeah, you could, but it's risky. Okay. It better be a very quick snipe or a very quick day trade, but it's not something that you're going to carry over to the next day or the day after, because it could tank on you like Zoom tanked on me when I actually decided to take a bite in it, fully knowing that we are in a bearish country, in a bearish territory, So the bot, again, is not omniscient. The bot simply, this is what it simply does. It reads my algorithm and it looks for 6 confirmations. And when it finds it, it just sends you the tickers. Okay, I'll give you the list of the tickers at the end. It only gives you the tickers, and just the bot basically alerts you and says, hey, take a look at the chart for Micron or Taiwanese Semi. It's a potential buy. It's a potential put. Okay, that's all it is. You have to look at the chart and find confirmation. If the bot gives you a ticker that you're not familiar with, such that you cannot name the actual name of the company, it's like, hey, what is XYZY? And if you can't name the company, don't bother, just ignore it, move on. If you look at a company like, let's see, not AMC, that's, everybody knows AMC, NOW, okay? And you're like, yeah, I've heard that company, but you can't name the company, what it does, and what their unique selling proposition is. Skip it. Okay, please do your due diligence. All right. And when I call out my stuff, all right, here's the legalese. I'm only telling you what I am doing. I am not telling you to get in it blindly. Please do your own due diligence. My entry and my exits are solely my own. I take no responsibility of it. That is purely 100% your responsibility. The only responsibility that I have of other people's money are the clients that I manage their money. Okay, I am completely fiduciary to them. Okay, so I have to be responsible to them, and they'll have to fire me if I do a bad job, or they'll continue paying me and giving me bonuses and big Christmas gifts. I'm expecting big Christmas gifts from my clients. Don't worry, they're not here. From them for the types of returns that I have given them over the year. Now, consider this: NASDAQ, SPY, Dow Jones, on average, has been down 23%. NASDAQ alone has been down like over 40%. Okay, they're up. They're positive. They're green. Do you think they're happy? All right.
So is your bot for day trading or swing trading? It's token, by the way.
Hey, can I call you by your real name?
Yeah, that's cool.
All right, that's Brian, everyone. He's the one that I'm really excited to get in on it. So after the spiel, Brian will go back to SPY or the ES futures, and love to get your input on it. I already gave them theirs and you didn't hear it. So let's see if you and I find common ground on our future outlook of SPY. All right. So moving on. There's a Buffett rule, and the Buffett rule is try to focus on as few stocks as possible. So my recommendation is write this down. My 4 stocks I will focus on are, and write the tickers. And when you write the tickers, please make sure to go through their fundamentals, read about it. Every time there's an earnings call, listen in on it. Every time there is a report about them, news about them, make sure that you get notified on them. Like really, really get to know them. Every single day, do the Fibonacci retracement. It's easy, just click a button on TradingView, boom, it's right there. Okay, so be able to know the support and resistance of your 4 stocks like by memory, like you dream about it. Okay, and you know that the support is 138 and the resistance is 145. Okay, and that way when you get an alert, you'll know where it is in relation to the alert that has come in. Okay, so you can enter with confidence. Okay, so know 4 of them at least really, really well. Okay, and try to stick to trading them if you can. All right, the 520 risk management. It's on Discord. It says it's one of the Zooms. I forget which one. So if you go to Discord, the general aspect of the 520 risk management is this. So suppose you have 4 stocks, okay, and you have, let's say, for example, $1,000 portfolio, okay, or $10,000 portfolio. So let's work with $10,000, okay. If one of the 4 stocks that are popping up on the alert and you were to jump in either on a day trade or on a swing trade, okay, never go above 5% of your total portfolio. Okay, so 5% on 10,000 is $500, right? Right? Okay. So if you're doing stocks, you can actually buy partial stocks. Some of the platforms allow you to buy $500 worth of Tesla. Okay, so you don't have to deal with the theta bird. Okay, and then whenever it hits its profit target, you can sell the partial shares, all of it. Okay, and walk away with the profit. So it won't be much, but you know what? It'll be safe, and you can build it up much safer, and you can have a bigger winning streak, because if it doesn't work out for you, guess what? You can just hold on to it, okay, and wait for it to get back up, because eventually the good stocks always go up. All the bad stocks eventually die. All right, think of Kodak. That used to be one of the big stocks some time ago. Do you remember Blockbuster? Right? Blockbuster used to be the thing back then. It's all gone. All right. So never risk more than 5%. If anything, what I do in my portfolio is that I would risk actually 1%. Well, that's because I can do it. 1%, sometimes 2%. Okay. On a Tesla, it would be like 4%. But 5 is the absolute max on any given stock. And every time I break it, for some reason, it seems like God comes down to me and he goes, reminds me that I'm breaking my own rule. 5%, no more. Okay. And no more than 4 stocks open at the same time. Okay. So that's where the 20 comes in. No more than 5%, no more than a total of 20% risk. Okay. Such that if you ever have a flush out, and flush outs do happen, okay? You got into 4 calls and something happens, and from Wednesday, Thursday, Friday, everything just starts dropping. Guess what? You lost everything, okay? You can barely walk away with pennies per option, okay? Or the other way, you got puts, and then there is a relief rally, and it has happened to me one time. I shared with you on Discord how I lost basically about 12% of my total portfolio during this melt up, during the relief rally. Okay, why? Because my portfolio, I had more than 4 stocks, unfortunately, but it was less than 20% risk. It flushed out on me. Jay Powell did not go along with my plans. And, the rally took place, and I'm like, what the heck, and it burned. It really hurt. But guess what? I'm not completely knocked out. That's what's going to keep you from getting knocked out. So if you have a $10,000 portfolio and you absolutely completely wash out, you will have $8,000 to be able to continue working, start all over, and rebuild it. Whereas if you have 70% of your money and you get flushed out, guess what? You're all the way down to $3,000. That means you have to have a return of at least 350% in order for you to barely break even and go into profit. 350%. 350% return. You understand? Whereas if you're at $8,000, right, you just need a 25% return on investment to get back to even. Okay, that's why the 520 risk management is key. All right, so on a daily basis, please keep a journal. And this is the way I would recommend it. This is the way I've taught it to my one-on-one clients who I've taught option trading. My goal is to hit X amount of dollars profit per trade, X amount of dollars for the day. Okay, so for example, it could be whatever I trade, let's say APPS, okay, whatever contracts that I get in, the moment I hit $200, I'm out. Write it down. Because if you hit $200, you can get out. If your dollar for the day is, let's say, hey, look, think about it, right? Okay, let's imagine Monday you go in and you got laid off from your existing job. Okay, you're laid off. And they give you a decent severance. So you got 6 weeks for you to find another job. And then you go, do I really want another job? And hey, I think this might work. Okay, so what is your goal? How much do you need to make per day in order for you to be financially independent? 200 a day, 400 a day. Well, per week, let's say all you need is $1,500 per week for you to be financially independent. Okay, so break it down and put that goal. Second, 9:40 to 11 a.m. is my workday. Well, it's actually from 9 o'clock in the morning, but the bot doesn't throw out alerts until 9:40 because it's got to read the first 10 minutes of it. You never want to get in the first few minutes of it. The option implied volatility is like through the roof. And oftentimes, even when you're right, you're wrong because you're going to lose money. So don't do that. Okay, you want to wait until at least 9:40, preferably until 10 o'clock, and what the overall trend is going to be. Okay, from 9:40 to 11 is my workday. Okay, take only the alerts that follow the trend. Okay, so if you're following the bot, okay, and it's a bearish day, and there's a sell call, and it's a stock that it's a stock that the support and resistance, take it. If you don't know it, and if you can't put it on a chart, don't. Paper trade it. By all means, you can paper trade all you want, okay? And in the future, you go, wow, look at this. This thing paid off 50%. Goodness, let me find out more about the company. Why is it so weak? And once you know, and you're familiar with it, and you know the next Fibonacci levels for the next day, you can take it the next time the alert comes in. Again, I'll show you the list of stocks that we have on the bots. We have 2 bots actually. I'll tell you later a little bit more. So 9:40 to 11 is your workday. That's it. Okay, take the alert and follow the trend. Okay, 11 to 2 is your research time. You're staying on top of the news. You actually begin planning for tomorrow's plan. Okay, don't look at the ticker unless you're trading futures. Even futures, don't look at the futures. Just stop trading. This is your lunchtime. This is no screen time. You're listening. You're reading. You're looking at charts and planning for tomorrow. Okay. Now, when should you work from 2 to 4? You have a second shift if you didn't hit your daily goal. if you hit your daily goal, let's say it was, $400 a day. Okay. If I can hit $400 a day, man, I am set. That's $2,000 a week. That's $8,000 a month. That's $96,000 a year. I can live with that. Okay. I don't need the man. I don't need to be working for the man. If I make that much, great. If you hit that, guess what? Your work is done. From 9:40 to 11, you're done. Okay. Go out there and do what God called you to do, what your passions are calling you to do, what your hobbies is calling you to do, what your wife and husband and sons, daughters are, they're asking for your attention. Invest your time in things that matter. I mean it. But if you didn't hit your goal, 2 to 4 p.m., come back, take a look back at the alerts and see where it stands. Look at the indicator and see which way the trend is going, and you're able to jump in. And believe it or not, 2 to 4 is a great time to trade, not only options, but also futures. Don't trade when you're hit your daily goal. Already said that. Don't trade if you hit your daily loss. So if your goal is to hit $400 a day, but if I hit $500 loss, I'm out. You stop working. You fire yourself for the day. Why? So that way you don't FOMO, you don't try to revenge trade, you don't try to hit a home run. Okay. Journal it, review it, and learn from what happened, because every loss is a lesson. And if you don't learn from that lesson, you're bound to repeat it. Just like when you go to college, if you get an F, you failed that class. Next semester, you have to take it all over again. You have to pay for it all over again. And if you fail again, guess what? You have to take it again, otherwise you don't graduate. So do that with your losses. That's your tuition. If you lost $500, that's your tuition. Learn the lesson from it, so that way you're less likely to repeat it the next time. Okay. Some lessons can be as simple as, oh man, I was putting in a put option, but somehow as I changed the date, my platform automatically changed it to call. And when I clicked the review button, I didn't even look. I didn't review, and I just clicked trade. I've done that. I've done that. All right. So in the hurry of trying to get into a trade, sometimes you make mistakes like that. Journal it. All right. So if you hit your daily loss, you're fired for that day. If you're tired, emotional, you're tilting, you have a headache, you had too much partying the previous day and your head is spinning, don't trade. Okay. You're fired for that day. This one, I'm going to go a little bit faster. Okay. So number 1, concentrate on 4 to 6 at most, the Buffett rule. Avoid style drift. So define your trading style and master it. Is it day trading? Then master it. Is it swing trading? Then master it and stick to it. Time your trades. Okay. Indicator Pro is great for entries and exits. Patience. Wait for the right trade to come along. You don't have to trade. Trade only when you have to trade. Manage your risk and reward. So 520 risk management, and the Fibonacci levels. You'll know the support and resistance, and you'll know when to get out. So let your winners run, cut your losses short before entering a position, have a predetermined stop, know when you're exiting before you even enter the position. Okay. And that could be, hey, if you didn't do your Fibonacci, that could be your daily target for that stock. If I make X amount of dollars, $100, $200, I get out. Just follow the rules that you have made. Okay. Trade directionally. In other words, follow the trend. Okay. Oh, one key thing. Don't average down in losing position. Okay. Unless you are super convinced of your technical analysis. Okay. I've done that and it has paid off, but you know what? Many times it has not. And my losses just, tripled, quadrupled. Okay. if anything, you want to average up in winning positions if the volume is there and the momentum is there. So if the trending is just like just crashing down, or it's very, very bullish and you just nonstop, the candles that you see, the Heiken Ashi candles are long, very few wicks, and then you see it long again, and you see these, the three white soldier formation, and you look at the bottom and the volume is higher and higher and higher. Oh, then definitely average up. Buy high, sell higher. Okay, that's going against the traditional idea of buying low, sell high. Okay, but trade directionally. Okay, Fibonacci clouds, there's a lesson on that in the previous times. When you get into profit, move the stop loss to break even, okay, or slight positive to it, by all means. It can be anywhere between 10 to 25% profit day trading, okay. Post analysis of your trade, don't lie to yourself. Every loss is a lesson. Journal it, write it down, okay. Number 9, turn over your portfolio. Don't buy and hold. That is the old way of doing things. Okay, it no longer works. Okay, if you're not convinced of that, take a look at what has happened in the past year. Keep learning. Knowledge is the best return on equity. Okay, keep reading books. Keep watching the videos that we have put together on our education tab. Okay, and these are the tickers for the indicator bot. Now, I told you that we have 2 bots. One of them is actually in the clouds, okay? And that's in the possibility that if I'm out of town, or number 2, if my computer crashes or my internet breaks down, which has happened, okay? Those are the tickers, all right? And then on my computer, these are the tickers, all right? So rewatch the video, you'll be able to look at each of the tickers, make your own stock list, put it up over here, add them onto your trading view. At the end of the day, guess what? If you are in this situation, right, at the end of the day, this is all you got to do. Okay, you have the CJ's list. On a daily, this is what I can do. I can flip through all the indicators and look at, wow, hey, Walmart, look at that. Death cross. Doji, oh man, look at, high volume, nice. Walmart, potential. So each and every time that you go through the daily, you'll get ideas for tomorrow, okay? This Array Technologies, hey, this thing is actually moving up. So this actually may be a bounce. So maybe long-term, you might go into that. ARRY, do your due diligence, please. Avis budget, what the heck? Okay, this might be a good Fibonacci level, and look for a bounce on that. Coinbase, look for a bounce on that. Coupa, what the heck? Look. See where the market is going? Look at Coupa. What in the world? That's a bull flag. Okay. So Coupa, you want to write down on your notebook and say, I'm going to watch this the next time there's a huge bull run. Okay, so you can flip through your stock list like this. Keep flipping through. It takes you, if you have 4 stocks, it takes you like 20 seconds. But if you have like 20 stocks, it'll take you 1 minute to just flip through, and very quickly the indicator will give you an idea as to what to look for. Okay. And some of these things look like A+ setups. Okay. The ones that are kind of like ranging, like Microsoft, not going to touch it. Micron, FOMO, I missed it. Netflix, oh, hey, look at this. Okay. Actually, I feel that Netflix is going to bounce. NOC, hey, look. Okay. I like that formation. Northrop Grumman is going to bounce. Why? Military contracts. Okay, as long as there's a war on, and Congress just passed another huge, what was it, almost $1 trillion worth of money for the military. I mean, come on. This is service now. It's ranging. Okay, it's actually looking for a squeeze, TTM squeeze sometime soon. NVIDIA, that's my support level right there. Okay, so you can flip through this, okay, at the end of each day and get an idea as to what to get into. All right, so that's that. All right, let me go back to the E-mini futures. And at this juncture, let me see questions. No futures on indicator bot. Can we set up for ES SPY QQQ? So TQQQ is your setup for that. And really, it doesn't work because when you're doing funded funded accounts, Michelle, the threshold is just too narrow. Okay. Do you see a hard stop loss or mental one? Good question. If I walk away from something, I'm going to put a stop loss in it. If I'm standing, if I'm like in front of the computer and I'm watching my day trade, it's a mental one. Okay, especially if I made a call out on indicator, I'm on top of that. I want to win. I want to get to a point where the next scenario, I'm like 100 wins, 0 losses. Okay. I want to be perfect. Okay. Why? For you, so that you're making money, so that everybody's happy, so that everybody doesn't, complain about that one loss that killed them. Right. I mean, but 100% will never happen. Right. But that's my mindset. Right. So in any case, I have a mental one when it comes to day trades. Swing trades, you can have a stop loss, put it in, make it mechanical. So when in doubt, just put in a stop loss, set it and forget it. So that way, if it doesn't work out, it doesn't work out. Okay. But at least if you set the stop loss, you did it based upon Fibonacci levels. Okay. And it's not based upon, your greed or your fear of losing money and stuff like that. Okay. Make it business as usual, unemotional, get it done. All righty. So we are coming to a close almost. So I want to introduce to you Token, also known as Brian. I've met him. Hello, Brian. I have met him through one of our Facebook groups, and then eventually connected with him through direct messaging. I saw his posts. He actually started a Discord group, and he does fantastic work. He is a spy master. I think we should just call you the spy master. And if we set up a channel, we're just going to call it a spy master. Tell me if you have any objections to that, man. The spy doctor, spy master, I don't know, either one, right? And when the market was just rallying into FOMC, I'm like, oh my gosh, I'm negative 10,000. The next day I'm in negative 20,000. And I'm like, oh, it's killing me, right? So
don't worry, bro. Don't worry.
So I talked to Brian, and I said, hey, look, man, how you doing? And he was like, I'm all in YOLO on SQQQ. And I'm like, what the heck? And
I walked away with 25K.
25K. Congratulations. So I was like, dude, what's giving you confidence? So he gave me like boom, 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 all of his technical analysis. And he just confirmed in me, it's like, okay, I'm on the right track. And needless to say, when FOMC took place, oh boy, it definitely paid off nicely, So some people, what I made that day, some people don't make that in a year. And I was like, yes, thank you, Brian. So Brian, I owe you more than a dinner, but more than that, I'm very, very envious to get you on board, introduce you to our guys, and have you actually be the spy master. So with that in mind, let me turn it over to Brian. And here's the ES. Tell me whatever chart you want me to put up and indicators that you want me to put up. to talk about it. So let me ask it this way. I'll set you up this way. Based on your technical analysis, where do you see the overall market through SPY, generally through SPY? Where do you see the overall market going into the end of this year? Because there's a potential Santa rally. And then going into 2003.
3,800. SP 500.
Right here?
Here, can I share my screen?
Yeah. Yes, you can. Let me do this. There you go. Okay, everybody can see Brian's screen?
All right, can I show you guys something real quick? So look at here. So you see how here, let me take these lines off so you're not confused. So this is the NAS, right? This is the main market.
Hey, CJ, I'm still, sorry, Brian.
Yeah, I see
I'm still
yours.
seeing your screen, CJ.
Oh, you are? Okay, let's see.
You just need to stop sharing yours, I think, because it says there's two.
Oh, okay, let me see. Where is the button to, oh, stop share. Got it. There you go.
All right, you guys see it?
Yep.
All right,
Thank you.
so here's the main market, right? I'm just going to break it down like just kind of like a beginner tutorial just for like 30 seconds so you know what's going on. So here's the main market, right? So this is the NAS, this is the SP 500, and then this is the triple Qs. You see how they move together, right? So if you think about it, the SP 500 is like the father, right? Then he has kids. He has the NAS as a son, and then he has the triple Qs as the son, right? So whatever the SP 500 most likely does will mostly push the NAS, right? So in the triple Qs. But what most people don't understand is like, say if I pick, say, Microsoft, right? Look how similar it is. Look how AMD similar it is. NVDA similar. Amazon similar. Apple similar. Even Tesla similar. This is the bear market right here. So when we bounce, like say, I'll show you my charts in a second. So when we come down to here and around 3,800 on the SP 500, like around, probably around 3,500, 3,400, that's probably where we're going to bounce. And then if we bounce, all these companies are going to go back to new highs when we tag. So like pretty much this. So right here, we're right here, right? So if we go back up here in the market, all these companies, Apple, Amazon, they will go back to their original highs. So even if you go to like say, like let's go back to the 26 on Amazon, and then let's go to the triple Qs on the 26, right? Sorry, I got lines everywhere. So here's the triple Qs, right? So say 15th, right? If I go to Tesla on the 15th, that one was holding that day. So look, we had a downfall. So pretty much whatever the triple Qs and the NAS does, it's going to push these tech stocks. And that's what a lot of people don't understand. So like, see, here's the downfall in the AMD. Here's the downfall in Microsoft, NVDA. Here's the downfall, Amazon downfall, Apple downfall, because they mimic the triple Qs. Now, not all of them are going to do the same thing every day. Like this week, Meta was doing its own thing Friday. It was pumping why all these were going the same way. So if you're a long-term investor, what you want to do is, if we break through right here, like say if you're investing like Tesla, and then we break through right here, expect these companies to break new lows. And then when they start breaking new lows, what you want to do is you want to find buying pressure on the side. So like, here's Tesla, right? It's kind of hard on Webull, but see, there's a lot of buying pressure right here. So if we break through on the triple Qs to new lows, expect Tesla to go to 120. But when we find this bottom in the market, when the bear market's over and we bounce, expect all these companies to go back to new highs. And what I'm really expecting this year into next year is like when we bounce right here, I really do think we're going to get not a stock market crash, but I think we're going to get a real session. So we'll probably bounce right here. We might tag new highs up here, but eventually we're going to go back down because the economy is getting sicker and sicker and sicker. And when the housing market gives out, when the banks give out, when everything gives out, we're going to crash again. And then you're going to get this opportunity again to make money because there hasn't been that much opportunities like this since 2001. So right now is probably the best time to long trade if you're doing that. If you're doing day trading, then you can understand by just following his bots, and then make sure you follow like the NAS and the SP 500 because what they do daily is going to predict your tech stocks. If you're into tech, yeah, there's some penny stocks that don't follow it. There's some stocks that don't follow it. But the biggest advice I'm giving you right now is if you start to trade a stock, go here, look at the time frames, right? So like, look, so here's the triple Qs, right? So if you go to the highs in the triple Qs, 11/26/2021. If you go to the highs in Tesla, 11/05/2021. Apple, you go to the highs in Apple's. Their high is right here, actually. Where is it? Yeah, their high is right here in the back. So, it's around 11/19/2021. So whatever the market's going to do, it's going to do to these stocks like Meta. Right here was their high. And then here's the bear market. So that's pretty much what I wanted to explain. But also, there's also here, let me pull it up. So my charts, I base my charts off of indicators and bots. I use CJ's bots. He's got really good bots, so I really like him. That's why we're friends. But like 9 counts, like if you understand 9 counts, like we got a 13 count like this. And this is when CJ hit me up. And when I got this count, I told him, I was like, it's gonna be okay. Because when we get a 13 count like that, that's super rare. And when we got that count, I went all in. I went all in on calls on SQQQ. I bought them for December 30th. I bought them at like 39 cents, and now they're up to $1. They were at $1.40, but they went down to $1.10. So I walked away with about 35K. But just basic indicators like I might have to hang on. I'm trying not to show my things, but like basic like techniques like this. Like when we got this, CJ was hitting me up too, and I was like, we're not breaking this trend line. But what I'm seeing is we're going to go back down another 19%, 18% in the SPY. So if you do your math, around the SPY, do that on your your trading view, and that's probably where we're going to bottom. I'm not going to try to time out the bottom perfectly. That's not what I want to do. What I want to do is I want to buy companies that have a high flip over rate. Like, is it okay if I show my company I'm looking at, CJ?
Yeah, go ahead.
Okay, so look at this one. And here's a bonus too. So like, look, when your friends tell you that Bitcoin's a scam, let me show you something that a lot of people don't realize. So like, look, if I go to the highs in the market, right? So the highs in the market was 11/26/2021. If I go to the highs in Bitcoin, 11/13/2021. So whatever the market's going to do, it's going to pump your Bitcoin or your coins. There's some coins that don't follow it, but why trade a coin that doesn't follow it when you can trade coins that follows the market and you know what they're going to do? But here's the company I'm looking at. So I'm probably going to dump in about 65K into this company. It's called Mara. It's a mining digital company. So they mine crypto pretty much. Now, when you do, like I said, like check the dates when you invest, right? So like, look, the highs in the market was 11/26/2021. Bitcoin's high was 11/13/2021. And then if you go to Mara, the highs in Mara was 11/12/2021. It was at $80, $90 a share. Right now it's at 380. So when the market bounces and then Bitcoin bounces, this is going to go back up to $85 a share. So I'm dumping about 65K in this, and I'm going to hold it until about summer, and I'll probably walk away with like 600-700K. And I have my own Discord, and they're all on this too. They love it. Like this week, this went from I think 5.62 to down to 375. So this is a great opportunity to buy. So just throwing that out there. But
Hey, Brian, what do you think of HUT? Are you familiar with it?
yeah, HUD doesn't. So look, I've compared all the companies, and Mar doesn't. All the other companies doesn't compare to Mar. So like, look, I'll show you June lows in Mar, right? This is what caught my attention in June. So if you go to the market, right? So here's June lows, right? So if I go to like say 7/13/2021. Okay, 7/13. Well, hang on. Make sure I'm on the right date. Yeah, 7/14/2022. Sorry. So if I go to Mara at 7/13/2022, it was at $7. And then it went up to $18, $19 because the market rallied right here. That alone pumped it from $7 to $18. So now since it's at $3, and if we get this next leg down, like, you know, in the SPY 18%, and then the NAS comes down to here. So say if the NAS comes down to here, right? That company could hit. See, the thing is, when we get we're going to get bounces down the road, and these bounces will push up Mar like 20% in a day to keep it alive. It's crazy. It gets so much volume. It's crazy. But when we come down to here, I'm probably going to buy Mara, and then the volume alone, like the volume alone up here is going to push it probably past $90. But all the other companies, like trading companies, they don't get this kind of buying pressure like Mara does. That's why I like Mara. Like HUD is a good one. It's so cheap. Riot, the good thing about Riot is they don't pay for electricity that much. So yeah, that's a good company. But Mara, just its volume is just insane. Like look down here, look at these volumes. Like it's nuts. Like it's super rare to get like volume like that in a mining company. But I'm pretty sure you guys know what the VIX is, but the MACD on the dollar, it's turning right now. Let me show you. Like we haven't got this low on the MACD and the dollar all year, and it's turning. So when this thing turns and it starts to pump up, the market's going to crash hard. So what I'm thinking is when on this last sell-off, on this last leg down, it's going to be a melt-off. Here, let me show you. It's not going to be like 2008, but let me show you something. So this was 2008. We're at 91% correlation to it. And right now, if we get that hard push in the dollar, we're going to push hard down. We probably won't get like this, but we could come down halfway, right across. And if we do, you're going to get the biggest opportunity in your life to buy stocks. But is there anybody got any questions? If not, I'll hand it back to you, TJ.
Thank
CJ.
you. So that's Brian. I hope you've learned and have taken his advice. I am really, really excited at what he has shared. And so I'll talk to him later and we'll talk about, how we can work together. But I hope you all benefited from it. Okay. Michelle gave you a chat. So we're going to end it at this point. We're at the hour and a half mark. So we're going to end it here and we'll record it and then we'll post it up and then we'll go from there. And Brian, if you can stick around for a minute, I'll talk to you and then we'll go from there. All right. All right, everyone. Thank you so much for being here.